This video is a review of Toyota's fiscal year 2025 full-year financial results, period from April 2024 to March 2025. Toyota Motor Corporation is a Japanese multinational automotive manufacturer. Toyota owns the luxury brand Lexus and has partnerships with other automakers such as Hino, Daihatsu, and Subaru. FY 2025 results summary. Toyota achieved operating income of 4.8 trillion yen for the fiscal year 2025, driven by price revisions and value chain profit expansion, while continuing future-focused investments and strengthening its operational base. For fiscal year 2026, it forecasts operating income of 3.8 trillion yen, aiming to build on its strengthened foundation, continue long-term investments, and develop new sources of profit. The impact of U.S. tariffs has only been partially factored in. Despite expected lower profits, Toyota raised its dividend to 90 yen in fiscal year 2025 and plans another increase to 95 yen in fiscal year 2026, maintaining its policy of stable returns to long-term shareholders. Consolidated vehicle sales. Consolidated vehicle sales for the fiscal year totaled roughly 9.3 million units, or 99.1% of the previous year's sales. Toyota and Lexus vehicle sales reached roughly 10.2 million units, 99.7% of the prior year's total, slightly down due to supply constraints from certification issues and other factors. Electrified vehicles made up 46.2% of total sales, a notable increase from the previous year, driven mainly by an 850,000 unit rise in HEV, hybrid electric vehicle sales. Consolidated sales remained roughly the same as previous year, but hybrid electric sales increased significantly. Consolidated financial results. The consolidated financial results show sales revenue of 48 trillion yen, operating income of 4,795 billion yen, and net income of 4,765 billion yen. Revenue reached an all-time high, but net income decreased slightly from previous year. Analysis of consolidated operating income. Operating income in fiscal year 2024 was 5,352 billion yen, but after excluding a one-time gain of 352.9 billion yen and 700 billion yen in comprehensive investments, the initial forecast for fiscal year 2025 was set at 4.3 trillion yen. Despite negative impacts from lower sales volume and a weaker model mix caused by production suspensions in Indiana, actual operating income reached 4,795 billion yen. This was thanks to stronger earnings from price revisions, lower incentives, and increased value chain profits, along with 510 billion yen in cost reductions and marketing efforts. Geographic operating income. This slide shows operating income by region. Japan maintained strong profits despite higher costs from strengthening its supplier base. North America saw a decline in operating income due to lower production caused by a 4-month shutdown at Toyota's Indiana plant over quality issues. In Asia and other regions recorded increased profits, mainly driven by price revisions and other positive factors. FY 2026. Forecast consolidated vehicle sales. Consolidated vehicle sales are expected to reach 9.8 million units, a 4.7% increase from the previous fiscal year. Toyota and Lexus sales are projected at 10.4 million units, up 1.2%, reflecting a recovery in production volume. Electrified vehicle sales are forecasted at 5.184 million units, accounting for 49.8% of total sales. Although profits are expected to fall significantly due to the impact of U.S. tariffs, Toyota says it will not raise sales prices immediately and is forecasting a slight increase in sales volume. FY 2026. Forecast consolidated financial summary. The full-year consolidated financial forecast is based on assumed exchange rates of 145 yen to the US dollar and 160 yen to the euro. Under these assumptions, Toyota projects sales revenue of 48.5 trillion yen, operating income of 3.8 trillion yen, income before taxes of 4.41 trillion yen, and net income of 3.1 trillion yen. FY 2026. Net income is forecast to fall sharply by 34.9%, but Toyota always keeps its forecasts fairly conservative, so it may not end up being that bad. Toyota's performance is likely to be largely affected by the content of future U.S. tariffs. Analysis of FY 2026. Forecast consolidated operating income. FY 2025. Comparison. FY 2026 forecast for consolidated operating income reflects several year-on-year factors. A 400 billion yen increase from the removal of one-time expenses related to Hino Motors suspension, a 745 billion yen decrease due to foreign exchange impacts, and a 350 billion yen effect from material prices. Only the estimated U.S. tariff impact for April and May 2025, 180 billion yen, has been included. An additional 470 billion yen is planned for comprehensive investments. As a result, the operating income forecast stands at 3.8 trillion yen, with the potential for further improvement. The impact of U.S. tariffs has only been factored in for April and May so far. Additionally, the exchange rate, which was 153 yen last year, is forecasted to be 145 yen this fiscal year, creating a negative effect. Rising resource prices and U.S. tariffs are also contributing factors to the expected decline in profits for fiscal year 2026. Dividends and dividend forecast. Toyota's dividend policy is to increase dividends in a stable and consistent way to reward long-term shareholders. Despite a drop in profit for fiscal year 2025, it raised the full-year dividend to 90 yen, up 15 yen from the previous year. For fiscal year 2026, despite uncertainties such as U.S. tariffs, the company plans to further raise the dividend to 95 yen per share, an increase of 5 yen. The dividends have been increased every year, which is great. Share repurchases. Toyota has not set a specific budget for year-end share repurchases, but it plans to continue buying back shares flexibly in the future, depending on factors like stock price levels and the need to accommodate requests to sell shares. It is difficult to predict business performance this year due to tariffs, but Toyota will continue to buy back its own shares when it has spare funds, so we can expect Toyota to continue to return profits to shareholders. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 2,672 yen as of May 8th, and the US dollar stock price is $187.92 as of May 8th. Although the earnings forecast for next season showed a significant decline and the stock price dropped after the earnings announcement, the decrease was only about 1%, which is within an acceptable range. Current PBR is 0.97 and PER is 11.2. Dividend yield is 3.56%. Compared to recent years, the projected drop in earnings has led to a lower EPS, earnings per share, which makes the current stock price appear expensive based on PER. However, in terms of PBR and dividend yield, the stock remains relatively undervalued, and a 3.5% yield is considered high for Toyota. Conclusion. FY 2026 forecast shows a significant 34.9% drop in net income, and Toyota's earnings were widely covered in Japanese news. Since President Trump has criticized Japan's auto tariffs, this issue remains a major concern for foreign automakers selling in the U.S. However, Toyota's forecasts are typically conservative, and Trump appears to be showing more flexibility on tariffs, so the actual impact may not be as severe. Additionally, Toyota increased its dividend for fiscal year 2025 and plans another increase in fiscal year 2026, which is a positive outcome for shareholders. Going forward, while currency fluctuations will play a role, the key focus will likely be how U.S. tariffs affect